Okay guys, welcome back to my stock market technical analysis channel. Let's get right into the charts, look at where things are heading, let's get a read on it. Okay, last couple of videos I talked about this gap island reversal right here. Just to roll it out, we're looking at an hourly chart of the SPY, and that's the S&P 500. Basically, you've got this bearish rising wedge. I've marked it out in this bold red. We had a breakout to the upside, which created an island top, and it reversed. So the island was created when you gapped up. This was a gap up on the news or the jobs report, and then we gapped down right here pretty much after the Fed, and that created the island top reversal. So that is a reversal pattern. And what I said in the video when we got this breakdown was that this pattern, the way you trade these patterns is you get the breakdown, and basically what a lot of times what they'll try to do is shake out anybody who took this island reversal pattern before they make the big move down. And the way they do that is to run it back up into the gap. They'll gap fill, or sometimes they'll run it, about halfway through the island area right in here. So the way I trade them is when you get the breakdown, you can short on the breakdown, and then you would stop out above. I'm gonna, with this market and how wide the swings have been, I would stop out above the island. So anything above the island on an hourly print, I would just stop out, and because that voids this reversal pattern. But as long as they're continuing to, as long as the price action's below this island top, the pattern's still valid, and you're still below the island top. So that money is still trapped, basically. It's still a losing, there's still losses here for the bulls, and that bull trap is still in play. So what I'd expect is to see this thing roll over, but again, could run all the way up into the middle of the island and run any kind of stops, run any short stops out. So this is continuing to work. However, in the couple videos ago, I pulled my short trade down here at this 350 because I didn't like the fact that it undercut it and then recovered on Friday. So I pulled it and was looking for a better entry as we ran up to the gap right here, and then also, you've got gap fill. So I'm going to probably take another shot to the short side. However, keeping an eye on the fact that, we are working our way higher, and we could void out this pattern. So we'll have to watch that. But as of right now, the sell signal is still valid. If you look at the daily here, we still had a nice impulsive breakdown. Yeah, we gapped up today, but, I'd expect this to kind of be the end of the road somewhere right around here, although understanding that it could go a little higher. I want to put this video out here and now because I want everyone to understand that this could be the area of the inflection point where this gap island reversal pattern, continues. Basically, we run out the stops. Anybody who got on this thing short late to the game has probably been run out of their position by now, and so now we're free to roll over. So we'll watch that and see how this plays out, whether this does start to roll over here or whether it continues higher. I think a close below this basically the gap right here, this 312, a daily close below there would be pretty bearish. That would mean that this gap entry has now rolled over and we're starting to head lower. So I'm watching for that. But the one thing that gives me a little bit of question is the fact that the Qs hasn't broken down. It's recovered its support line. So here is the support that I see in the Qs. We've got this bearish rising wedge right here. You can see reaction, 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 lots of reactions. We broke down, and then here's a back test right here. And then today they gapped it up over there and regained support. That's a recapture. We came down, tag support, and so far it's held. So if that continues to hold, then that would mean that this breakdown right here was a bear trap. And so that would set in motion continued move to the upside in Qs, probably going to get us all the way up to this trend line right up here at around 240, 250. Looks like around 250. 250, if I go to the weekly chart, is interesting. We've got some longer term on the Qs, and I pay extra attention to the Qs because they're basically manhandling the market. You know, it's 5 stocks essentially. It's FANG. If you don't know what that is, then I don't think you have any business in the stock market, but it's basically FANG. And they are manhandling the market because they have so much weighting. They're such large companies that the rest of the companies could be going out of business. And if FANG is doing well, the market's not going to really roll over too much. You know, it could maybe just go sideways. And look, here on the weekly chart, we've got a reaction here, reaction here. So this is kind of major resistance, reaction, 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 and then here's the recent highs that we had. So it looks like maybe, you know, if the Qs wants to rally into this last week, it might want to pop us all the way up to 250. That's probably the area, if we get up there, where you know, the next objective short would be if this island top reversal doesn't work out. So again, I still think there's more. There's potential for more upside. That would be a 3% gain to the upside, roughly 3.5% if we overshoot. And the downside, you know, we're still in the bull market trend line for the Qs. And that's basically why the stock market has kind of gone sideways for the last year and a half or so. It's because the stock market, the SPY, has broke the bull market trend. The SPY is not in a bull market anymore, but the Qs is still in the bull market. So here's the bull market trend line for the Qs. You can see reaction, reaction, reaction. And here we've started to break the trend twice. Each time the Federal Reserve was managed to basically save the market. That's basically why we quit breaking down. We broke down here in 2018. The Fed came out and they did action. And then we broke down right here. 2020, the Fed came out and did more action. So each one of these rallies in the breakdowns has been created by the Federal Reserve. So, you know, when people say don't fight the Fed, well, this is what they're talking about. The Fed continues to save the market, but we're coming up to resistance now. We're getting close. So if the market wants to run up to 250, I'll be looking to establish a short up there and let this, you know. But again, I'd like to see a reaction, you know, rather than just jumping in and shorting at 250. I think it makes sense to look for the rejection. So that's probably what I'll do if the island top reversal doesn't work out. But going back to the SPY, and if you want to look, you know, at the breakdown, here's the breakdown, and cleanly and clearly we've broken down. This is where the market should reject. It should start to roll over right here if this island top was an actual reversal and is not going to be foiled, then it should reverse right here. And then going back to the concept that the bull market is dead in the SPY, well, here's the thing. Here's the bull market. This is the trend line in the SPY. And you can see that that trend was broken. We've been sideways. So the reason why we haven't just gone down and started kind of the full-on bear market price action, and this remains to be kind of topping price action, not necessarily, you know, prices haven't just been moving down as we're in a bear market. They've been moving sideways, and that's because of the tech sector and the Qs. The Qs is still in a bull market. So when the tech sector breaks the bull market, then the SPY is going to start its full-on bear market momentum, price momentum down. But until then, you know, it still remains kind of sideways. The Qs is holding up the market. And I think that's why a lot of the focus has been on tech and the FANG stocks, because they're kind of the easy way to hold up the market because of the market weighting that they have. So if the Fed is doing any kind of stimulus, maybe they're doing it to support those FANG stocks, and the FANG stocks in turn support the S&P 500. So continuing to watch that. But again, what I'm saying is the market is is at a point where it should roll over. Doesn't mean it has to, but it should. So I'm watching for that. Here's another look at the tech sector and XLK. That's just another tech ETF. Apple and Microsoft make up a huge weighting here. And basically, we've regained support. So you can roll out. Here's your support line. We've got reaction lows right here all along the trend line. We broke down and gapped up this morning, came down and tagged it, and we're holding. So if this continues to hold support, then this is not a back test. This is a recapture of support, which means that this down here was a bear trap. So we'll have to continue to watch that. But if it breaks down here, then this could just have been the back test, and that means that we should start to roll over now in a more meaningful way and not just chop around. We should actually start to roll over and head down towards the next level of support. We've got a gap down here. You can see it right there. So we should run down to this 95. That's gap entry, and then most likely fill the gap, which would be 93.50. So watching for that. Here's this Walmart trade. Bigger picture, nothing really wrong. It's just having a little bounce back to resistance at 121. So we could run up and tag 121. That should hold as resistance as we continue to work our way lower. So we're still working our way lower. Everything is still bearish. Just today, kick back up to resistance. So that is okay there. Here's another one, DraftKings. This one's looking all right as well. So here's what we got on DraftKings. Nice clean uptrend right here on the hourly chart. And this is a big uptrend. I mean, this from the lows all the way to the highs was 288%. So huge gain to the upside. And then we broke trend right here, but not impulsively. And so we're having a kickback rally. So yesterday I said I covered my short and let it run up to the trend line where I then reestablished the short. And so now we're seeing weakness today. We're seeing rejection off of that trend line. So if this holds and we're not able to recover this support line up here at 40, basically 42, 43 bucks, depending on when we get there, then that would be a rejection off support. And I think at that point, we've had the kickback rally. We'll start to make our way lower. So this one looks good. I mean, it's objective right here or in this area to short the stock and add to a short position as it tags resistance. However, we'll have to continue to watch it to see how it plays out. The rest of the market, you'd expect to see the rest of the market break down, although this thing can break down. I mean, it's showing relative weakness today, down 2%. It was down, I think, 4 or 5% earlier, and the market's up. So relative weakness, which means that the technicals for this individual stock are playing out as expected. Here's another one that looks relatively weak, redfin, just short ideas, and basically nice cleanup trend. We broke it. It's very similar to DraftKings. I think a lot of these stay-at-home stocks, DraftKings, redfin, things like that, I think internet stocks basically is what it is, had a huge run-up, and those are starting to potentially unwind or people are looking to take profit. So this one, from the lows to the highs is up 275%. So very similar to DraftKings. We broke the trend here, and this is a kickback rally, a perfect back test right here up to 36. So that was an objective area to short at, and we're starting to roll over. So this can continue to back test. I mean, you can roll over a little bit, then run up and do another strong back test. So what I would say is it's only objective to add to the position when you get those official back tests. And it doesn't make sense to actually add to the position, until you get those back tests. So you can take the short here, or you could have taken it here. If we get a back test, we're still in the area. So, if you had needed to do a starter short, I took a small position here looking to add to it on back tests. But otherwise, we'll just let this roll over. And again, we got a gap down here, big old gap. So I can see that gap filling, and that's really probably the trade. The trade idea here is gap fill. And from where we're at now to gap fill is a 30% gain, 29 something percent. So that's the trade idea on that one. Just my opinion, not actual investing advice. Okay, just to wrap up, this is the chart to watch and it's the cues. So we just need to continue to watch this trend line. Here's your support right here going back. So we just need to watch this. Do we break today? And this is a back test and a rejection, or do we hold and this was a bear trap? Those questions remain, are not answered yet. So we'll have to wait till the close to get answers around that. Thanks for watching, guys. Leave me a thumbs up. Catch you guys on the next one.